Okay, we're going to get started. And one thing that I want to do, I want to just share a little bit of who I am real quick. So I have one short video to share with everybody here. And that way you can just get to know, who I am. I know we met at the event, the Exit Southeast Rally 2.0. And very, very excited. What a great event. I really enjoyed being there. Want to just do this quick little video so that way you can get to know who I am a little bit more before we get started here. Perfect. All right, so what I'm gonna do here is I'm gonna turn on the old video. There we go. And thank you so much for being on. I'm so excited to do this launch call here today for the 4 Steps to Funding program. Everything that we're gonna be going over today and moving forward in this program is gonna be specifically geared towards your industry and your growth. And so we're going to be going over a lot of great stuff. I'm really, really excited. I just want to test out real quick. I see more people joining. If you could, I have the chat set up, and I did this on purpose. I have the chat set up where you can chat me as a host directly. And the reason why is I'm going to be saving those chats. So anything that any questions that you have that pertains to yourself and your situation, you'll be able to chat me. And so that way I can reply to that and give you guidance as we're going through the program. Another thing, if you could, maybe test that out. Try chat me real quick. I want to make sure that's working. And while I'm waiting for everyone to do that, one thing that I've done is I'm going to be sending out after this launch call here today, this webinar, I'll be sending out the replay. And then in addition, I'll be sending a link to join the next 4 sessions. So the next 4 weeks on Wednesday at the same time. There we go. Awesome. I love it. Yes, there we go. There we go. Thank you for the chats. So for the next 4 weeks, starting next week on Wednesday, every week, same time, I will be personally walking you through every step in the program. And once again, I'm going to gear it the same way when it comes to our chat. And the reason being is that a lot of times, maybe, if there's anything that I feel that will benefit the entire community, I will share that. Otherwise, if it's something that's a little bit more specific to your situation, obviously understanding that we're going through financial stuff, we're going through credit stuff, I want to make sure that you feel comfortable to share that if it's something that maybe you don't want to share with others. And so that's why I've done that. And one thing that I'm going to do just really quick, I want you guys to visually see the back end of the program. And after this, I want to make sure that everyone has their login. So I'll resend out the login to everybody so you're able to log in. But in the meantime, I'm going to share my screen one more time so you guys can get an idea of how this looks. So on the back end login of the course, you're going to be able to log in. You're going to see this. You can do this on your cell phone, on your iPad, on your laptop, and it's friendly to all platforms. And so what you're going to find is that when you log in, you'll first have information here. I have it set up that if you ever have questions throughout the program, you can literally just click this link and automatically ping myself and my team with any questions. And so those questions could be, hey, I'm on this step in the program. I have a question about this action. I just want some clarity. Or, hey, I was on Jared's webinar and I know he mentioned something around, SIC coding, and I just want to double check if there's something I should be doing there. You'll know what I mean as you're progressing through the program, but I've designed this so that way you get full-on support the entire time, not only from myself during these webinars, but then also from my team throughout. Okay, so I think that's really important to kind of highlight. Another thing that you're going to find is there's something in here that I've added. It's called Your Business Funding Profile. And so what's going to happen as you're progressing through these steps, you'll notice here that I've broken each step down. This is the 4 steps to funding. Okay, so step 1 is going to be our funding foundation. Step 2 is going to be a reporting awareness. as well as how to optimize and learn more about personal credit and business credit, and really more so how personal impacts the business as we get started. So I'm going to teach you exactly all the different things that you need to do so you have full awareness, as well as how to optimize. And then we're going to enter into building business credit. That's going to be business credit cards. It could be B2B relationships with companies like Home Depot, Sherwin-Williams, Lowe's, Quill. I mean, there's thousands. And so what we'll do is within here, I have a fully vetted list. And as we're working through the program, you'll be able to easily identify the best types of accounts for you and your business and your growth trajectory, and what will actually, what's the best one to open. Now, one thing that we're going to be going over here today and moving forward is our goal. My goal for you is to make sure that we have at least 6, by the end of this program, you're going to have at least 6 active reporting trade lines. That could be a business credit card, anywhere typically between 1 to 3 active. That could be maybe 1 to 2 active trade lines through companies like I was talking about, as well as like a line of credit or maybe a business term loan. Those are all considered trade lines. So our minimum benchmark by the end of this is to get you into 6 active trade lines, okay? So it's very important to understand. This is gonna be amazing. Trust me, you're gonna get access to so much capital, and it's just gonna really empower you. But in addition, I'm going to teach you as a bonus when we get to this section, I'm gonna teach you how to strategically manage your cash flow in a way in how lenders want to see it, to give you the biggest opportunity to get access to more capital, but more importantly, better terms, okay? As well as something called bank rating. And so cash flow is very important, because when you get in a position that you're either, maybe you're looking to get access a larger line of credit, instead of like more of an introductory one, like your first one, maybe you're looking to scale that up and get a significantly larger line of credit. Or maybe you're looking to get access to like a term loan, whether it be for a loan for marketing or acquisition of maybe a property for real estate investment, or sourcing it as a down payment to access financing under your LLC for a real estate property, or commercial. Could be a commercial loan. Maybe you're looking to expand, all these different things. And what happens as you get to that point, when it comes to the underwriting process, they begin to look at a lot of different things. And one of those is your cash flow management and what's called bank rating. So when we get to that point, I'm going to be really working with you. So that way, by the end of this, you literally have the perfect profile all around that lenders seek, right? You're putting yourself in the best position. So that way, really, lenders compete for your business rather than vice versa, you trying to figure out, hey, how can I get approved? And so one thing that I want you guys to see here under each step is, you'll notice at the end, it'll say, step 1 results, or step 2 results, or step 3 results. So right now it's showing that little lock button. And the reason being, as you're going through it, that will open up as you complete each, subsection within the step. And at the end, we're gonna capture the data of what we did, what we accomplished, and what's gonna happen is that's automatically gonna move over to your business funding profile. And what's really cool about this business funding profile is that over time, and what's included in this program for you, is our concierge funding service. You're going to get this for free for lifetime by being part of this first wave in my program, okay? So this can be really cool. And the way that works is, as you're moving through and we're capturing all this data, literally my team and I, anytime that you want to get access to anything, a business credit card, a loan, line of credit, in addition to what we do in this program moving forward in the future, at no additional cost to you, my team and I, knowing that we already have your data, will work on your behalf within our lender network that's nationwide, and we will assist you directly in pre-packaging any application, so we know it's being done correctly. We vetted out the best options where you're going to have the best interest rates and terms, and we will directly assist you in that as a benefit to make it much easier moving forward to get access to anything you need in the future. So that's what's really cool about this profile, is we're working together and building on this. It's gonna naturally just begin to like increase all the data and stuff like that you will have access to it, and so will my team. And so that's how this backend platform works. Now, what I want to do is I want to go over some education. So I'm going to stop sharing my screen, And I want to start by just going an overview education around all 4 steps. And then after this webinar today, you're going to get access to the replay. And then I'm going to proactively send you out videos and action items that coincide with the very first step, which is our foundation. So what should happen is by next week, Wednesday, we're going to go over all those things and review it together. And but I want to arm you in advance so you can start taking care of these items, you know, before that next call, or some of it you could do on the call. But my goal is to arm you with as much as possible in advance, so that way you're constantly progressing. And then if there's any times you have questions, we can address those on that call, so that way you're getting everything that you need. So, hey, thank you so much for the chats. I'm loving it. So let's go over this real quick. Let's really talk about what we're going to be going over here. So I just got my whiteboard over here. I love the whiteboard. So 4 steps to funding. What does that mean? Well, what I've done is I've been doing this for over a decade in the personal credit, financial wellness space, business credit, business finance. And so what I've done over the years of working with, just hundreds of business owners, thousands of clients throughout the nation on the personal credit and financial wellness side, is I've really trimmed down basically the necessity of what needs to happen. Because everything out there, I'm sure you've experienced it. You know, I get it all the time. I'm sure you do. Anytime that you have a business filing, you are just bombarded with marketing, especially around finance. And what they do is they always put like the best possible terms to kind of get you in there. And then you realize you apply, you're either denied, or you end up getting like, hey, you marketed that you could get, as low as, 4% on a line of credit, but now you're quoting me 30%. This type of stuff happens all the time. And the reason being is that almost every single business owner doesn't do these 4 steps. And so they end up, they get this marketing thinking, hey, that's sweet, I can leverage that. Then all of a sudden the terms are nowhere near what they're initially proposed. So it's very important that we build out the foundation. We have to do this, because then you're literally crossing all the T's, dotting all the I's in advance. So that way, when you apply with confidence, but we've literally positioned ourselves in the eyes of the lenders where they're like, hey, this person has everything set up properly. I feel comfortable to lend them money. In addition, the perceived risk here is very low. So I feel comfortable getting them better terms right out the gates. That's what we're going to be accomplishing. So let's talk about the first step here, which is funding foundation. Okay. Now, funding foundation, and I've spoken with a lot of you that are on this call already. So I know that most of you already have an entity that's been filed. Most of you already have a business checking set up under the business name tied to your federal EIN, and you also have the federal EIN number. Those are the initial 3 things that you have to have to even enter into play in this game. You have to have that. So if you don't, I have it in the program that if you have not yet established an entity, I have already fully vetted out all the best options, the most cost effective, while still providing everything that you need. So I'll get that over to you. So that's something that you need. It's easy to follow those steps, because those are the initial 3 steps that you have to have. You have to have the entity, you have to have the federal EIN, and you have to have a business checking that is specifically tied to your entity and your federal EIN. If you don't have that, then you got to make sure you go back to your business bank and open that up and make sure that that's updated correctly, because those are the first 3 things that you got to have to play in this game. Now, in the advance of that, we need to do a lot more under foundation. And so I want to discuss a few things that, that trigger a lot of denials or increase what's called perceived risk. And here's how it works. So now I know everyone in here is a little bit different. We have agents, we have brokers and things like that. So these type of things are a little bit different. But number 1 is we need to have a phone number that's categorized as business that reports to the 411 directory. That's very important. And I know, and I totally understand, like in our world, in our day and age, we operate on our cell phone. Everything we do is on our cell phone. But the issue is, technically, cell phones cannot and do not report to the 411 directory. The only way to get something to report to the 411 directory is by having what's categorized as a business line, not even a business cell phone. It has to be considered as a business line, which is either, a LAN network, like a old school, like phone at your desk, or it could be a voice over IP service, Zoom Phone has Zoom business phone numbers, Ring Central, these type of companies. And so in most cases, if you don't have a business line that's dedicated to your business yet, you're going to want to open up one, and it's very low cost. Like I recommend Zoom. I think it literally is like less than 20 bucks a month. And what that does is it does report to the 411 directory, and it is categorized under your business. And if you operate on your cell phone as your typical way of going about business, which is totally fine, this won't mess anything up, because what you'll do is you'll set up your business line, and if anyone does happen to call it, you can literally just have it forward to your cell phone and you operate as you typically do already. So it's not going to interrupt anything. But what we're going to be focusing on is we have to make sure we start hitting these pieces that the lenders look for, because statistically, what lenders have said and what they have found is that anytime that they've lent towards someone that doesn't have a business line, the default rates are actually higher. And so because of that, it can either lead to a denial, or once again, they'll increase interest rates or reduce the terms on you because of that. So that's very important. The next thing is brick and mortar. Now I know, especially with an exit, brick and mortar is going to be very, very, common, especially as a broker. So brick and mortar is very important. Now, if for any reason that you don't have a brick and mortar address, or if you've opened up your entity and it's still tied to like your home address, maybe when you originally filed it, it's tied to your home address. What you're going to want to do is update that and get it tied to a brick and mortar address. So you could either use like your brokerage office as your brick and mortar address. If for any reason that doesn't work for you, I will include this. There are very, very low cost options that you can open up what's called a virtual address that does report and show up as brick and mortar. And then what happens is they do mail forwarding services right to your home address or wherever you want it to go. So that way we once again hit that piece that lenders look for. Because just like the 411 directory, it has been shown that businesses, like home-based businesses is how they view them, statistically have a higher rate of default. So these are like some simple things that they're going to be looking at. They want to make sure that you have these things in place, so that way we're lowering the overall perceived risk. Now, I brought up one thing before, and I just want to kind of double check and have you go back and look at this. When you initially filed your entity, go back and look at that state filing and see what the address is that you have on record. A lot of times you'll have like a registered agent. It's not going to be based on that. It's going to be based on the actual address that you have tied to your entity. And if it is tied to like a previous home address, sometimes even tied to a previous home address you may not even live at anymore, because we haven't gone back and updated it yet. So like these are some like administrative type work that we're going to want to do to go back and just make sure everything is updated, fresh, as of today, in the way that the lenders want to look at it. So that's one piece of homework for you to do, is just go back, identify and pull up your original filings. You can do it online at the state, or if you have them saved as like a PDF, double check to see what address it is, and let's make sure it gets updated to a brick and mortar address. Very easy to do. There's change form requests, and all you have to do is update the address, and then we are good to go. So those are going to be like the first two main important things, at least when it comes to like the initial phase of foundation. Now, some other things that we're going to want to hone in on. In fact, I'm going to write this down real quick. Brick and mortar address. The last thing I want to talk about is your bank account. Okay, so business bank account. And here's what I'd recommend, especially right now with what's going on with the economy and how the lenders are working. So right now, obviously, there's been a shift in our economy. Lenders are getting more conservative, not only in like the personal lending side, mortgage. I mean, even I'm sure you guys have maybe seen this already, and if not, you're going to be seeing it. A lot of even like personal credit cards, if people have been like maintaining low balances, which they should, so their credit scores are higher. Well, what they're doing to mitigate risk is they're starting to lower limits on people. And so, and the reason why they're doing that is they're because of the economy, lenders typically kind of push back a little bit, so that way they can kind of mitigate their overall risk. So when this happens, lenders just naturally get more conservative. This is also happening on the business side. However, it's not shifting as much. They're just getting a little bit more conservative to make sure like these pieces I'm talking about are all in play. So that way they feel comfortable to lend you what it is that you're looking for. And so we're still in a very, very good position to get everything that we need. It just really enhances everything I'm talking about, that these type of things need to be done. Around the business bank account, here's what I'd recommend based on what's going on now. It's very important, and there's a strategy around this. It's very important to have like your main business checking. So if you have that already set up, you can still maintain that if you're used to your accounting in there and all the different things, that's totally fine. But the one thing that I'd recommend doing is identifying a local community bank or credit union if you don't have something like that set up yet. And the reason being is that local community banks and credit unions, they're very community driven, right? And they seek business owners, they seek small business. And in addition to that, a lot of times they have what's called manual underwriting. And so creating that relationship with them, really the first step is just having a business checking, can really serve you in many ways. They have phenomenal business credit cards. They have no doc lending. So as we're building up everything we're discussing, you could literally get access to business credit cards and even sometimes a line of credit with no doc, just solely based on your credit score, personal or business, and get you what you need. So like, this is what's so powerful about working with local and credit unions, is developing that relationship. But you don't want to forego the big banks either, because even though that they're really big and they're very numbers driven, they're not as, I would say, like geared towards customer service and that relationship on a community level. They still have certain underwriting in the back end that they look at. And one of those is, hey, do you have a relationship with us? Like US Bank, Bank of America, Chase, like these big banks, right? If you have a business bank account with them, they automatically feel more comfortable to lend you, money. And like business credit cards, typically the limits are higher right out the gates when you have that relationship. So what I would recommend doing is your homework is just kind of look at where you're at, say, okay, who am I currently banking with? Now, are they considered a large bank, or are they a community or credit union? And then we want to fill in the gaps. But I don't want to create more accounting work for you. What you want to do is just identify like what the minimum, opening balance is, and then just kind of, over time, just slowly kind of build that balance up in there. You could even separate out certain expenses if it makes sense. Like maybe there's some marketing that you want to run through a different bank where you'll do some deposits and do marketing expenses out of there. And then operational costs maybe are ran through your other account, those type of things. But what's powerful, once again, is by doing that, you're literally putting yourself in the best position possible to get access to more capital more quickly. But then the terms, because of that relationship, improve. And so, and if you have any interest, and I know a few of you on here, I know you already actively do this. If you operate in any capacity around real estate investment, both residential and commercial, really solidifying that relationship with a local credit union or community bank that has products available, business lending specifically, 100% you want to be working with them, because as you're building up that portfolio, those type of things play into their manual underwriting, and you can literally get to the point that they constantly feel more comfortable to lend you out what you need to acquire more properties. And so business credit is still a very key indicator in there. Like, we can't just go in there blind, but that relationship over time, as we're hitting all the pieces that they look for, I mean, you're literally arming yourself, like the world is your oyster, so to speak, at that point when you build it up this way. So those are just some kind of like tidbits, some strategies that I want to share with you that can really serve you immensely. So those are going to be like the first things that we want to go over on the foundational piece to make sure that we have set up. And then what I want to talk about now is going to be our reporting awareness. And so I've already sent this information out to a few of you that I had a call with. And so when it comes to reporting awareness, here's something that we want to hone in on right away. So let's just first talk about personal credit, okay? Personal credit, specifically Experian, is going to be the most important bureau for you right now in anything in relation to business. Because almost every single time, if they do pull personal, they're going to pull it off Experian, and really they're only looking at three things. They're looking at your score, so the higher the score, the better, obviously. They're actually also looking at your current open active revolving accounts. They're looking at your credit cards. So ideally, what we would like to see at a minimum is having anywhere between 3 to 5 active personal credit cards, open and active. And ideally, we want to make sure that the balances are 30% or lower. Now, the reason why I'm saying 30%, I want to be clear about this because a lot of times there's information out there that, hey, you want 30% is like the best ratio to have the best scores. That's actually not true at all. 3%. So if you have a balance that's 3% of the limit, that actually improves your FICO credit scores the most. But what the business lenders are looking at is they want to see 30% or lower because in their mind, you're open and active, you have credit, you're using it responsibly, but you're not over leveraged. That's their benchmark in underwriting. So if they see anything that has exceeded 30%, a lot of times they may require you to pay it down to below 30%, or they may give you a lower limit. Like let's say it's a business credit card, they actually may extend you a lower limit right out the gates because of the fact that the current balances on the credit cards are reporting above 30%. So dependent on your financial position, here's a strategy that we can do right away. In fact, if you're able to, I would work on this immediately because we're going to get to the business credit card thing quickly. And so first, go in, kind of pull up all of your different personal credit cards and pull them directly. Don't worry about your credit report because the report isn't always active and updated as of today because there's a natural delay in reporting. So you want to open up directly with your creditor and see what is my current balance and what is my limit. And then what we can do is based on the financial position is pay that down to 30% or less, remembering that 3% is the best. So if you're able to pay it down anywhere between 30 to 3% of the limit, then just maintain that balance. And then what's going to happen is when you get to the next reporting cycle, when you get your bill, basically, when you get that bill sent in the mail or as a email, as a PDF, the information on your billing statement is what's reported to the credit bureaus. It's not your payments. It's the info on that bill. So we want to make sure we maintain that balance until they generate that bill. Then we know it's going to report to the credit bureaus. And at that point, because of that delay in reporting, we have leeway now where we've essentially we've controlled the reporting of those cards to put ourselves in the best position to get approved for the best types of credit cards for the highest limits and all that. So if you have any questions, I have it set up where you can ping me directly. If you have any questions on that, let me know. But once again, the one thing you want to look at, because what business lenders look at is score. And by doing that reduction, scores are going to go up. So that's huge. But also we're putting ourselves in a position based on the underwriting, in this case, actually automated underwriting. And we're going to be literally putting our credit profile in the best position possible to get literally the highest credit limits right out the gates for business credit cards. And then on top of that, 0% introductory rates anywhere between 9 to 18 months. So imagine that. We're doing all the things to get approved for these cards. Now we're getting the highest limits, the best terms, and we're getting 0% rates for 9 to 18 months, depending on the card and what the offer is. So now we can begin to leverage that strategically for growth and operations. That's why these initial pieces are so important. Now, the other thing that they look at is they are going to look at if there's any sort of like history. I don't know if this applies to anyone on the call, and if it does, just ping me. But they will look at if there's any like derogatory or negative history. Really, all they're looking at is was there a recent bankruptcy filing within 24 months? That's the biggest one, as well as any charged off or accounts in collection that exceed $1,000. Though, and non-medical, medical doesn't even factor. They just want to make sure that there's no like charged off accounts that exceeds $1,000. That's, that puts a red flag. That it doesn't always mean you're denied, but once again, that plays with the approval rates and all the different stuff. But if we don't have to worry about that, if we're clean there, it's all about credit card management. Now, if you don't have 3 to 5 open active revolving accounts right now, please either message me or email me. Let me know and we'll connect directly, and I'll be able to tell you exactly what to do and what to get. So that way we can get additional accounts opened that will serve you well, the best types of accounts. Got to do this all the time, every single day, to make sure that we hit that piece that they're going to be looking at. Now, the next thing that we're going to talk about is business credit, okay? This is very critical because we've got to make sure that we understand how this works. So the beautiful thing about business credit is, like in the world of personal, there are so many variations in how your score is calculated. it's payment history, open active credit cards, what's the ratios? Like the FICO algorithm for personal credit is very sophisticated, and there are a lot of variables involved. And in fact, it's specific to the type of lending that you're applying for. So like your FICO score for a credit card or an auto loan or a mortgage, they're all different. So the FICO algorithm is very, very, it's calculated. When it comes to business, that's why I love business so much. It's very simple. It is, do you have any accounts reporting? How many do you got? What's the available capital? And then from there, are you making your payments on time? That's it. Do you got it? Are you using it? And are you paying it on time? Booyah. That's it. It's so simple. So that's what's nice is what we're going to be doing to build up our business credit scores. We have to remember that we got Dun & Bradstreet, Equifax Business, Experian Business, and then we have a small business that's tied to FICO. But really, Dun & Bradstreet and Experian are the top two, okay? Those are the most important. And so what we're going to be doing is, as I'm working with you in this program, we're going to be identifying accounts that report to one or all of those bureaus, because they don't always report to all of them. A lot of them just report to one or two, sometimes three. And so what we'll do is I'll have this laid out for you perfectly, where as we're establishing accounts, we know that they're for sure at least reporting to the top two, but we're also filling the gaps of the other ones. So we have that reporting history dependent on the lender in the future, that what they may pull for data. And so once again, oh, I got some messages here. Perfect. I'll make sure I reply to you on that. And so one thing is we have to remember Paydex score. So just like FICO in the world of personal credit, Paydex is king, specifically Dun & Bradstreet. And so we want to make sure that we establish over time up to 6 active accounts that are reporting. We're making our payments on time, which all that really means is net 30 terms or quicker. And then from that, we'll automatically build Paydex score. The one thing to keep in mind is it takes 3 months of reporting or seasoning to then generate the score. And we need at least 3 active accounts to generate a score. So if you, as you're working through and you're establishing these accounts, because we will establish and open up what's called online credit monitoring for business. If you're working through this, let's say like a month from now, you're going, Jared, I don't even have a score. What's up, man? Like there's nothing on here. The reason being is that we have to hit that threshold of 3 and more, and at least 3 months of reporting history or seasoning before it triggers that score. So just remember that. That's common. It's just the way it works. So there's a delay. There's a natural delay. And once that happens, boom, we're in the money. Paydex starts going up. And our goal, you'll want to write this down. Our goal is to hit 80 plus Paydex score. That is our goal. 80 plus, we've now entered the world of good business credit. And now we've just opened up all these opportunities. So that's going to be the most important thing. The next thing that we're going to go over here really quickly, and then I'll be getting you guys over this replay along with action items. And I got chats here, so I'll be replying to you personally on these questions that you've been sending me, is we're going to talk about the different types of business credit, okay? So I brought this up before, but our main focus in the very beginning are going to be business credit cards, okay? That's a big one because of the fact that they have the 0%. Anywhere between 9 and 18 months right now, okay? That's going to be our #1 goal, especially because if you think about it strategically as a business owner, I mean, it's almost like free money, right? I mean, where else can you get a 0% loan? You can't. I mean, even with the PPP loans that came out, yes, they were 30-year terms, very low interest rates. I mean, it was a phenomenal loan, but even that wasn't free, right? I mean, to get access to 0% lending between 9 to 18 months, I mean, that's just absolutely phenomenal. So that's a main focus for me in this program for you, is because just strategically as a business, to be able to leverage capital at 0% for a certain amount of time is an absolute no-brainer. I mean, think about it for your business when it comes to marketing, when it comes to operational expenses that are non-payroll related, when it comes to like any purchases. I mean, it's crazy to be able to get access, especially with a repayment term around 9 to 18 months. You know, for instance, to give you an example, it's not uncommon for business owners that need what I term as quick money. There's a lot of quick money business finance out there that they'll fund, you know, as soon as 24 to 48 hours is what they market. The issue is anything quick costs you a lot of money. It's not uncommon for those to have lower terms, like literally it could be 6, 9, 12-month repayment terms is very common. And typically the interest rates on those type of lending could be anywhere between 20 to 40%. I mean, it's crazy. I never advise my clients to do that, like ever. I can't even believe people do that. And I just think it's because they get in a bind and they feel like they need this money to get through something. And unfortunately, that's their only option. But for us, we're not in that position. We are going to be able to build up and we're going to leverage 0% financing for 9 to 18 months. It's going to be absolutely critical. We're going to want at least 3. My goal for you guys to have 3 those type of cards because it's just going to do wonders for your business. And then in addition to that, we're going to really hone in on that line of credit piece. Almost every single person I speak with, they want a line of credit. A lot of times it's there as a safety guard, as a safety net, you know, to have access to something. Maybe it's for payroll purposes, or maybe it's to kind of leverage some operational expenses and then repay it. You know, all this is completely fine. So the line of credit is going to be a really big piece for us in this program and teaching you how to get approved for that. And then I would say trade lines is the last piece once again. And the one thing that I need from you is I need you to either email me, chat me, you know, use the support piece within the portal. For me, it's important to better understand your business. And what I mean by that is it's not uncommon for an agent and or broker to kind of be doing a couple different things at once. They may have their brokerage and they have their team and they're growing their real estate business. But in addition, they might have like a marketing business, or they may have like, once again, like real estate investing. Like there's a lot of things I've found that a lot of people I work with in space, I call them as opportunity seekers. And so we're entrepreneurs, right? And so the better I understand what it is that you're looking to do as the full scope, that will arm me with the opportunities and like certain vendor credits and lines of credit vendors that would benefit, you know, exactly where you're looking to go, if that makes sense. So communication from you is extremely critical. So that way I can always make sure that we're doing everything necessary to arm you with exactly what you need to be doing to be successful in this business. So perfect. You know what? We have 3 minutes. I want to honor and respect your time, because one of my biggest mantras that you're going to find as you work with me is everything I do is to empower you to be successful. But ultimately, what I'm looking to help people accomplish is financial independence and financial freedom. But more importantly, is time freedom. Time freedom is critical for me because I've been doing this for over a decade in my business. I have a team of 17, and it took me many, many years to figure out the importance of how to grow and scale my business to ultimately free up my time. Because I literally would be working 7 days a week, 12 to 15 hours a day to get this business up and going. And I did that. I was naturally a workaholic. And because of that, though, like my family and certain things lacked. And I lost sight of what was important. And so over the course of many years here now, I've been very intentional with how I operate. So that way I'm there for my family. I have time so I can enjoy life. And so that's why time freedom is like the end goal for me for all of my clients, is to allow you to be ultimately just very successful, but give you more time to do the things that you ultimately love doing. So time freedom to me is absolutely critical. And I want everyone to experience that. So those are going to be the things. And I got messages here. So I'll be replying to everyone. I'll actually text and email you directly after this webinar. But I want to share my screen one last time so you guys see this backend platform. So please, I've already sent out, it's through the system. It would have been like probably right after the event. The login credentials were sent. If for any reason you don't have that yet or haven't found it, in fact, no, this is what I'll do. Right after this webinar we ended, I'm going to go back and resend out your login credentials to everyone. So that way you have access to this. And then what I want you to do is reply to me with any questions that you have specifically from our launch call today and anything that's important to you that we haven't already discussed, so I can make sure I tell you exactly where that's located. And then moving forward, our next call is Wednesday at 10 a.m. Eastern. And I'm going to be sending you this week all of this information here. You'll see that it's already in here. Like a lot of this information is already in here, a ton of information. But I'm going to be sending you specific tailored videos on exactly how to break this down that you can just follow to make it easier. And then I'll embed that into your course as well. So that we have access to both, because I'm going to constantly be coaching you through video coaching to give you everything that you need throughout this program. So very, very excited. Okay, I got some more messages here. So that's it for today. I'm going to send you out the login information. Please reply with any questions that you have. I'm then also going to be sending you the registration for the next 4 weeks, Wednesday at the same time. You're going to get a replay of this video as well as all replays moving forward. And then in addition, I'm going to be sending you out via email and into your portal, your program portal, the videos that I'm going to break down on every step so you can begin to take action on all those things in advance of our next call. So that way on our next call, I'm going to answer any questions on the first step, and then we're going to begin to move forward to the next step. And we're going to repeat that process every single week. And now some of you that I've spoken with, you can already get access to business credit cards. So in addition, because of our initial scan and that call that we had, I'm going to be sending you links that I've already vetted for you that you can get approved for right now. So we're going to be proactive. I'm going to send that to you in addition. So that way you can kind of jumpstart this a little bit based on your position right now. If you're approved, I want to get you approved right away. So this will be tailored to you in a one-to-many format. So thank you so much for your time. I really appreciate it. I'm very excited. If you need anything, please reach out, and I'll put my info in here real quick so you have it if you don't have it already saved. There we go. I just put that in there. So please save that phone number. You can call or text me. Save that email. You can email me, and then look out for my emails to you here shortly, and let's rock this out. Thank you so much. If you need anything, just reach out. I really appreciate your time, and I will be talking to you very soon.